Have you ever sat back with all the hype today around crypto millionaires, YouTube finance millionaires, and the Wolf of Wall Street and just ask yourself, why haven't I done that yet? And then you download the first trading app and you start to look at company stocks and you realize you have no clue what any of it means. Well, how about we start at the basics? What in the world is a stock? Thank you all for joining in today. I remember like it was yesterday. Someone showed me the Robinhood app and explained how easy it was to invest, and I was petrified simply because I knew nothing on the topic. There are a ton of people telling you what to choose to invest in or how to choose to invest in a stock, but for those just getting started, there's a very simple yet typically silent question. What the fuck is a stock? Let's start by understanding the stock market first and how it started. In 1790, the Philadelphia Stock Exchange was founded and is noted as the first stock exchange in the United States. In 1792, the new kid on the block rose to fame, known as the New York Stock Exchange, and quickly became the prominent exchange of the United States. But this isn't the first time the world had seen this type of activity. In fact, global stock markets began as far back as 1531. But the most noteworthy in history would be the creation of the East India Trade Company in 1600, where the Queen of England granted merchants the 15-year charter. Back then, individuals would invest in overseas trade voyages, but would be liable for more than they originally invested if the ships were destroyed, causing financiers to seize lifelong fortunes of investors beyond that of which they originally invested. A group of London merchants then formed a corporation which would limit a member's liability to only the amount in which they originally invested, providing us with much of what today's stock market principles are based on in terms of liability of an investor. Next question. What is the stock market? For those of you that are fresh into the world of investing, the stock market is a marketplace created for corporations to raise capital by allowing people to buy tiny pieces of ownership in their company so they can then take that money and invest it into their business. Imagine a farmer's market that holds multiple stands from multiple farms. Some farms sell the same things like your basic tomatoes, carrots, peas, onions, but some sell specialty items like super hot peppers, local honey, homemade beef jerky. The stock market is just another form of marketplace, such as this, or even something like eBay, Amazon, that allow businesses to trade portions of ownership of their company. When you buy a stock from a company, you're purchasing a small piece of that company in the hopes that that company continues to grow over time and either pays you in the form of dividends or grows in total stock value. Now, on to the main attraction, right? What is a stock? Most companies start out private, using private investments or their own invested and created revenue to fund their current operations and growth. There comes a time when those companies need much more money than they have the ability to create in a very short period of time in order to scale at volume. When this happens, a company will go through an IPO or an initial public offering, where they finally allow for the public investors to buy into their company. A stock, also known as equity, is a form of productive asset or security. This one's important because in order to truly invest, you need to invest into something that will grow in value or generate returns in the form of dividends that entitles the owner of the stock to a portion of the company's assets and profit. In lesser terms, you're buying an agreement that if you provide the company with X amount of dollars, they will then take your money and use it to improve their operations, logistical issues, supply chains, vendor contracts, etc., to provide you with either a monetary compensation in the form of those dividend payments or a growth in the stock value that you can then later sell and keep the gains in value. Let's take a look at Tesla. Right now, they're selling at $582 per share. They have a market cap of $561 billion, which means all shares added up together that are owned by investors are worth this $582 billion. Each of those investors hold a small portion of ownership in Tesla. I, for example, own 9 shares, or 0.000000009% of ownership in Tesla. The percent of one's ownership is directly proportional to the amount of shares they own. The price of a stock is driven by many factors, typically the profitability of a company, and reflect what investors are willing to pay for the stock. Sometimes those prices are higher or lower than what the company is actually worth. These prices can sway dramatically over short periods of time, but typically, if the company is in a healthy position and continues to innovate and grow, they should show gradual growth over the long term. This typically is what will freak most early investors out. Most people get into the stock market not knowing how much they're actually able to invest or not knowing what to expect. They see a massive swing of 5% one day up, 10% the next day down. Might be a little over dramatic, but I've seen worse. And it causes most people to freak out and say, okay, I don't want to lose my money, I'm going to sell. If they sell on that downturn, they've done nothing but lost their investment, or at least lost a portion of their investment. Holding for the long term is really the true investor's play. Taking a look at Coca-Cola, ticker symbol KO, over the last 5 years, they have both paid dividends of around 3%, but have also grown in value from $45 per share to $55 per share, or 22.22% over 5 years. As you can see, there are major swings within the 5-year period, but ultimately, the graph continues to move up and to the right. Thank you for sticking around to the end. If you enjoyed any part of this video, please like, share, subscribe, and hit that notification bell so YouTube tells you every time I post something new, and I will see you in the next video.